They've seen oral care growth to be about 15.8% in terms of market share. Hair oils business also reported a market share at 130 basis points, and the market share of the company in its air freshener category increased by 140 basis points. But the international business saw a big decline in their margins. That's translational largely because of a 90%, despite a 90% growth in Turkey revenues, the currency depreciation meant that there was a further decline in the EBITDA margins as well. So a large part of the EBITDA margin decline can be attributed to translation losses in their foreign business as well. The company has recommended a dividend of almost 2.7 rupees per share. Does not account for too much in their overall scheme of things, but the margin miss is something that the street does not like.
All right, Mangalam, thanks very much for that. So that's Dabur for you on your screen now. Stocks at about 529, down 1.5%. By the way,
I just want to point out, Prashant, that 15.3% obviously is much lower than our poll. The previous year number, for context, is 18%. So, over the last 1 year, that's serious margin erosion that Dabur has clearly witnessed.
Yeah. By the way, have you started closing well? We have, right?
I think so. We're all here.
It's all happening.
It's all
so
happening.
Let's bring in Nigel as well. He's with us in the newsroom floor as always. Nigel, hi.
I was wondering, guys, what happened to you all? I've been waiting by, putting my hand up, waiting to get counted, but good to be on the show. I was listening into the commentary. So, you have HDFC Limited. That's a stellar set of numbers. It's a good set of numbers, at least as of now. 6.5% weightage on the Nifty. And when that moves up, that's the reason why we have popped above that 18,200 odd mark. I'll tell you what, we have expiry that's playing out. And in the next 60 minutes, if we can get to around that 18,215 and trade above those levels, that's going to lead to a big bounce from here. Because positioning is such that 18,200 call had a very, very high open interest. Now we're trading above those levels. The premium out there is around 10, 11 rupees. So those writers, they're counting on that level holding out. The high of today is 18,208. So just keep an eye out on the HDFC stock, on the Nifty, and also pull up the option. I think we have that plate that should come up for you. 18,200 call. That's a very, very important mark. At least as of now, the positioning is that 18,140 holds out on the downside, while on the upside, we're very, very close to the resistance level of around 18,210. And I think Dabur's numbers you'll have already covered in detail. But Deven Chauksi as well joins us on the show. Hi, Deven. Thanks so much for joining in. Well, HDFC, the big boy was called up by the Nifty, and it's delivered because that's moved to the high point of the day. Have you had a brief look at it? We have the net profit number coming at around 4,425. Total income up by close to around 35%. NIs as well, much better than what our poll threw up. It was better by close to 250 to 300 crores. No complaints, it seems, with regard to those numbers. Your view on the stock?
Hi, Nigel. Good afternoon. Well, from the limited numbers which have come up, definitely the results are better than the expectations for sure. And I'm not completely surprised, though, because all along, every month-on-month basis, I think we've been experiencing the numbers on the housing finance side, the loan book. And as a result of which, we find that I think the loan growth is remaining absolutely strong and convincing. Given the kind of a strength in affordable housing finance, given the kind of strength in the retail lending in the housing finance, I believe that the company probably has a much bigger numbers to achieve once they probably start getting the advantage of the combined books with HDFC Bank. On the liability side, I think when the cost of fund comes down, possibly the ability to lend further with higher market share, and at the same time, I think with better margin is going to be, I think, significantly higher. So at this point of time, I believe that I think though it is still a few months or few quarters away, till the time I think they get a complete advantage of the merged balance sheet with HDFC Bank, I would think that I think this is a story which is going to grow much faster and much bigger in subsequent quarters, given the kind of advantage that they would have on the low cost of funds that they would be having through the merged entity. At the same time, the investment value of the listed companies, which is HDFC Bank, HDFC Life, and AMC, I think it's really in more than around 50 to 53% of the total market cap of the company, which I believe I think is once again a trigger point, because each of the listed subsidiaries are showing relatively better signs of growth going forward. And given that kind of possibility, we are likely to see higher amount of contribution coming in from them as well, as far as I think the book values are concerned. So from that point of view, I believe that I think the story is becoming much stronger. we are probably, I think, looking at least 15% kind of an upside from current levels going forward in the next 12 months.
Okay, by the way, HDFC Bank and Reliance, these three names are contributing about 50 index points to the 100-point move that we have on the Nifty right now. But Mitesh is with us as well. Mitesh, they're coming to you a little late, but we've got a rally. Actually, you know, the market looked good right from the word go, right, in the morning. Constructive, slow, steady, but very sturdy, reliable kind of rise. Nothing in fits and starts. What would you do now, Mitesh?
Afternoon, Prashant. I think I was expecting that there would be some consolidation given that we were slightly overbought, and I was hoping to buy at lower levels. That hasn't played out, but in case you have long positions, I think 18,250 still remains an important pivot for me. Would expect some kind of profit booking happening over there. Suggest that take at least partial profits and then trail a stop loss about 18,150, and these are spot levels I'm talking about. Having said that, on the stock side, Muthoot is something which is a buy that's given a good price and volume breakout. So here I would recommend a buy with a stop below levels of 1,030 for targets of 1,090. And Petronet, I think, has broken down with a gap and is slightly negative on the chart. So keep a stop at 230 here. Look for targets of 217 on the downside.
Devin, any thoughts on Dabur? Anyway, the street wasn't expecting fireworks. We know about the rural stress. But there is that disappointment that we are seeing on the margin front. Is this the right time to look at Dabur, or you would wait it out to see how the rainfall, the monsoon plays out, because there is that worry about El Nino?
So I think that worry may continue, I guess. I think we are not going to see any different pictures than the worry, frankly. I think till the time the monsoon sets in, I think we get good news. But I think having said that, my reading says that I think most of the raw material or the input prices are under control, and has also experienced from other NBFCs, other FMCGs rather. I think they have been, relatively more steady on the margin front. In my viewpoint, I think Dabur could possibly see in subsequent quarters relatively stable to better margins. And that is where probably, I think the penetration into the other than the metros would probably help them. In my viewpoint, I think the worst seems to be factored into the price as I see it. I think from the point of view of, looking at the future investment, maybe I think one could possibly see gradual increase once the validation on the numbers also comes up. But yes, I think downside seems to be limited at current levels.
All right, Devin, stay on. We'll just get to the bottom of some of the numbers that have made the headlines today. By the way, Bajaj Finance is also really surging away. It is the big winner on the Nifty right now. And it along with a couple of other NBFCs, actually, stocks doing really well. So Bajaj is the one that is on the spotlight. There we go, the big winner. Nifty mover, actually, the top gainer on the Nifty right now. But we are going to stay with financials and get to the bottom of some of the details there. Today has been a good day. I mean, whether it was Chola Investments, stock is still up by, I think, 6 to 7%. And then, of course, these big numbers from HDFC. Let's go across to Abhishek for a lowdown. Abhishek, good day for financials.
Well, to begin with Cholamandalam, it was a record-setting quarter in terms of especially the loan growth on a YOY basis at 36% is the highest that you are seeing in last 27 quarters. This was led by the fact that disbursements were pretty robust, growing at 20% on a sequential basis. Disbursal to AUM ratio has also declined a bit to about 42-43% from 68% that they had in the previous quarter, which was on exaggerated level. It needs to come down to around 33%, 35% for normalization. 8-quarter low in terms of gross NPA and net NPA ratio coming in at 4.83%, 4.63% and about 3.11% respectively. They have reported highest ever quarterly operating profits coming in at 1,276 crores. So the new business momentum that has been gaining traction over the last couple of quarters remains robust in terms of growth, largely made up of the SME portfolio over there. And cost to income ratio is one of the lowest in last 5 quarters, coming in at 39.2%. So P&L both in terms of NI and PAT, it's a beat on our poll. Brokerages remain upbeat. The only worry factor for brokerages is that they want to see the promoter dispute to be resolved in a peaceful manner so that there is future re-rating of Cholamandalam. So across brokerages like Macquarie, they remain bullish on the stock with a target price of 860 per share. You also have JP Morgan, who have double upgraded the stock to overweight from underweight, and they have increased the target price to 1,020 from 700 earlier. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Chola's numbers look very, very good. By the way, keep an eye out on Manappuram. Now, there's a clarification that's come in with regard to the ED's ongoing search at the registered offices of Manappuram. They are giving out some clarification out here. They're saying it's mainly with reference to deposits that were accepted by Magro. That's Manappuram Agro Farms, which is an erstwhile sole proprietor of the concern of the promoter prior to 2012, which was subsequently repaid, except the deposit of around 9 lakhs. So the quantum is appearing a little bit small out here, and there is some clarification that's coming out here. Remember, yesterday the stock took a hard knock, but at least as of now, going by the clarification that they put, this number is looking a little bit small, so I think that's why we're seeing a bit of a recovery on the stock. Just keep an eye out on that. We'll try to pull in the management as well to get further clarification, but this is what we have as of now, and this is the first official comment that we're getting with regard to the ED searches at their office. 2 points. One, it appears like the amount is small, and in fact, it appears that this is for many, many years prior. So I just thought we'll point that out as well. But I think in the studio, I'll want to make a point.
No, could you pointed this out? There's some recovery, Nigel, on the stock that we can see. It's trying to climb its way back up, and it is already positive. So we'll keep that on the radar, because otherwise Manappuram was sitting out of the rest of the NBFC rally for those reasons. But Devin, just to come back to complete this point, I mean, you were speaking about HDFC earlier. Chola has had pretty phenomenal numbers as well, and even a couple of the other NBFCs. I mean, in general, across the board, we've seen pretty strong, robust growth, record high margins for most. So tell us, what would be your best pick within the NBFC universe and also banks? I mean, we've got blowout numbers from ICICI Bank, Kotak Mahindra Bank. Even if you look with a magnifying glass, it's tough to find a problem anywhere, right? So tell us your favorite bank name and the non-bank stock that you like.
So we continue to like Surabhi, the businesses and the retail lending. And I think NBFCs like Bajaj, particularly, I think remains the favorite of the lot. At the same time, because Bajaj also has the housing finance portfolio in its subsidiary, so that I think also reasonably grows reasonably well, along with I think other housing finance companies like HDFC. So I think that remains, I think, literally more convincing. What we want to see is, I think these companies are also having the ability to have a stronger ability to, I think, raise money at a competitive cost. And as a result of which, I think they're in a position to maintain the margin. Plus, given the size of the book, particularly likes of HDFC, you are also seeing the repricing of their assets. So that is also, again, becoming, I think, a more important play when you are looking at maintenance of the margin. From that perspective, these two NBFCs stand out very clearly in our portfolio, and we remain invested in these companies. As far as banks are concerned, I think the clear conviction stays with ICICI, largely because of the fact that the CASA ratio remains, I think, extremely convincing, and it remains at a sustainable level at a higher levels. At the same time, I think the retail credit growth is continuing to grow. And fortunately, in last few quarters, we are seeing, including for HDFC, the corporate loan book growth is remaining relatively more stable. So corporate sector banks remain largely favorite in our portfolios, and we continue to hold them.
Okay, do stay on. Need to slip into a very short break. On the other side, we'll talk more stocks. We'll also invite our Alpha manager for the day, Anshul Saigal of Kotak PMS. 18,200 plus. So the 18,200 mark has been conquered as the Nifty and the Sensex continue to march higher and higher, 3/4 of a percentage point. And that last up move that you're seeing in the markets, which happened about 20 minutes ago, is courtesy the banking name. So HDFC Limited had a blowout quarter, profits much ahead of street expectation. So that fueled a rally in HDFC Limited, which is now up close to about 2.5%. But even the rest of the banking pack, pull up the bank Nifty and you would see that up move. And across the board, financials, whether it's insurance, NBFCs, you are seeing a surge. So Bajaj Finance, SBI Life, HDFC Limited, we spoke about, a Bajaj Finserv, and HDFC Life, HDFC Bank, State Bank of India. All these stocks are showing you gains of anywhere between 1.5% going up to 3.5% for Bajaj Finance. But let's now talk about Bajaj Consumer, because that's doing exceedingly well in the broader markets. Very strong Q4 numbers. Mangalam is here to tell us more. Mangalam.
But as far as Bajaj Consumer is concerned, you know, it's a 14% growth that the company has reported in their revenues. The EBITDA has grown by 20% and the net profits grown by about 13%. The street likes EBITDA growth at 20% and margin expansion largely because this comes despite gross margins compressing by almost 200 basis points year on year. There has been some stability quarter on quarter, so we've seen 110 basis points improvement out there. The fourth quarter, the company grew higher in modern trade and e-commerce channels, a place where the company has powered ahead as far as their might is concerned and their focus is concerned too. The other thing is that it's led by 10% volume growth. At the same time, while Bajaj hair oil market share remains absolutely flat, it's important to know that their non-oil and new businesses are doing extremely well, and that's grown by nearly 2.1 times in FY23. The other triggers that the company is spoken of is that their key product, Almond Drops hair oil, will continue to regain momentum and premiumization will take place out there. They'll extend this brand to have some new launches in FY24 as well. Their non-almond oil portfolio, which is coconut and amla, are doing extremely well. They continue to perform well and they're building digital-first brands, so that could further aid their growth in the modern trade and e-commerce platforms. For all of this, the company, after being an underperformer for the last couple of years, is trading at around 14 times, so the street is finding some value out there. So that's about Bajaj Consumer. But just one rejoinder on Dabur as well. I was going through the numbers right now. It appears that the net profit miss, apart from the EBITDA being below estimates, is also on account of higher depreciation, and that's because the company consolidated Badshah's masala business with itself, and 22 crore additional depreciation has purely been on account of the amortization of Badshah Masala's goodwill. So that explains another bit of a miss on the profit, and as a result of which the stock at the low point of trade.
Okay, all right. Mangalam, thanks a lot for that. Deven is still with us. Deven, any comment on this? Bajaj Consumer?
Apparently, I think their strategy seems to be working right. I think for the launch of the products which are more value-added products. I think this is interestingly what we have been observing in some of the companies' cases, including Bajaj Consumer, Dabur, etc., even for that matter, Marico. Whenever I think the products become more commoditized, and when the company starts, I think, rebuilding the product portfolio or evaluating the portfolio, probably I think they tend to get relatively better margins. That is what I think a key learning that one gets out of the observation from these companies working. I guess in case of Bajaj Consumer too, this particular situation is playing out. So on one side, rejigging the product portfolio is contributing to the better amount of sales as well as for the margin. And on the other side, they're creating a separate presence for the distribution in the digital media, digital marketing space, which is again, I think, promising that the company could going forward start commanding relatively better amount of distribution reach as well as margin. So interesting strategies. Of course, I think we don't have coverage on the company, so we don't put across any recommendation. But the strategy appears, I think, quite interesting. And I believe that I think it's a case to look at these companies from investment perspective.
All right. Okay, got that. Deven, good to have you on the show today. Thank you very much for taking out the time and providing your perspective on all the stocks and the themes that we've discussed. Look forward to our next call. Well, let's move along then. Our next guest on the show is Anshul Saigal, Head and Executive VP at Kotak Portfolio Management Services. Anshul, great to have you on and good to be speaking with you as always. And we're speaking at an interesting time, right? Because I remember a lot of our past conversations where you've always focused on finding stocks where there is a value, where perhaps, the best is not being reflected in the stock price. And now at about 19 times, forward earnings, maybe the market is throwing up more such pockets than at 23, 24 times as we have usually traded. So where do you see these pockets of value where perhaps future growth is not being fully priced? And give us some, little specific examples if you can.
Hi, Surbhi. It's a pleasure to be speaking with you as always. There are, for a portfolio manager, there are conflicting interests. On the one hand, you seek stocks where value exists and where you think that over the next 3-5 years, there can be significant upside from current levels, hence the risk reward is favorable and you go in and buy. On the other hand, you have this eerie sort of comment that keeps going on in your head, which Warren Buffett once made, which is that the markets can remain irrational longer than you can remain liquid. And as a result, you've got to balance both objectives, that you've got to, be in the right names, yet balance the fact that markets can work against you for a long period of time. And your names should not get impacted by this sort of volatility in the markets. Having said that, at this time, it looks like, and to us, when we dig deep, it looks like there are ample opportunities in the markets to make money over a 3-5 year period. Over the last 1.5 years, nearly 18 to 20 months, markets, the broader markets have seen a significant correction, and dime a dozen opportunities are down 30, 40, 50%. While their businesses are not impaired permanently, businesses have been impacted, but those are only temporary because of reasons of war, inflation, interest rate increases, etc. And businesses are bound to come back. Some pockets where we are seeing these opportunities are financials, capital goods, consumer durables. We see these opportunities even in defense. If we go more into commodity plays, then sugar is one pocket where we see these opportunities. And even IT for that matter. Last year, the IT index is down some 25, 26%. Some stocks which were trading at 30, 35 times price to earnings now are available at 15 times forward price to earnings. That seems like a significant correction. So there are ample opportunities. And as I've said before, I'm spoiled for choice.
Problem, Anshul, is that in the small cap universe, one stock in the sector can be up 50%, but another stock in the sector, in the same sector, can be down, 50%. So you've got to really pick the winner in the small cap space. It's not one brush which applies to the entire universe. But, tell us your call about the sugar. Because that's not a sector we often see large investors dip their fingers into. It's usually the retail investor, the traders who, participate in the cyclicality of sugar. Tell us why you like sugar and what is the opportunity that you see?
Rima, hi. Over the last many years, we've seen sugar production move up from somewhere close to 28 million tons to 35, 36 million tons. On the back of higher yields on cane. Now, that was causing a big problem for the industry because farmers were not getting their monies on time. Mills were not making money because sugar prices were depressed. This establishment, in fact, if you ask me, one of the most elegant sort of reforms that this establishment has brought into play is the sugar reforms. They brought in a policy where there was a minimum sugar price applied, which meant that sugar couldn't be sold by the mills under 31 rupees. And second, the ethanol policy was a game changer for this sector, where this establishment preponed the ethanol blending from 20% by 2030 to 20% by 2025 and gave incentives for ethanol production. What this did is it shifted cane away from sugar and towards ethanol, so the oversupply of cane came down. Second, the temporary increase in sugar production, that also came down. Third, you had a huge import bill because of crude. That came down to the extent of 4 or 5%, which again was positive for the current account. And fourth, it was also good for the environment because ethanol is less polluting than regular crude. Overall, this was a win-win solution. Farmers got their money on time. Mills did well. They made money. And all of this is yet not priced into the prices. And imagine a scenario where you have scanty rainfall in this country, where sugar is cane particularly is a high water requiring commodity. If there is a scanty rainfall year, then sugar prices can go anywhere. We are already seeing some uptick in that. Globally, sugar prices are at 27 cents. They used to be at 18, 19 cents. That is unprecedented. India is yet to follow, and that will reflect in stock prices subsequently. Looks like a favorable risk-reward opportunity at this time. We'll wait and see how it plays out.
Anshul, hi, afternoon. Although there was some reports over the weekend suggesting that given not this sugar season, the sugar season was already passed, but the next season there may be some sugar export ban or something. And of course, I mean, it's a very politically sensitive commodity, right? I mean, lots of elections, etc. But those are things which can happen for anything. We can't. They're unknowables in that sense, right? Anshul, you mentioned consumer durables as well as an area you like.
Absolutely.
Which segment particularly there?
You see, I mean, if one was to be more recent in terms of opportunity, then I would say the air conditioning, fans, fast-moving electrical goods, that space looks interesting. We are already witnessing a hotter summer, and it looks like that will reflect in volumes for this sector going forward.
Hi, Anshul. Anshul, name a couple of stocks if you can, what you'll have added, with due disclosures in the last couple of months, because there's a big party going out there. And, a lot of our viewers will like to know a couple of stocks with the disclosures, that something new that you would have added or something that you'll have doubled up on the position.
See, hi, Nigel. We like the commercial vehicle space. We think, I mean, there are only two players in this space, two largish players in this space. We like the pure play in this space. We believe that that company has significant room for margin expansion. They've embarked on a 3-year exercise to enhance market share and expand margins. And that exercise started sometime in 23, financial year 23. So from a standing start of say 6.5% EBITDA margin, they want to rise beyond the previous peak, which was about 11.5%, 12%. Which means that if they were to execute well on this space, they could very well double their margins over a 3-year period. That seems like a significant earnings growth trajectory at a time when the cycle itself is positive. Given that, we like this space and we like the company that we've added to in our portfolio.
Okay, by the way, look at the momentum in the market. This is turning out to be quite a solid session today. 160 points up on the Nifty, and the index is racing away. 18,250. Remember, 18,887 is the all-time high. We're still some distance away from that, but that chart has momentum written all over it today. Mid-cap index is also not bad at all, about 0.6% higher over there. Anshul, before we let you go, what's the feeling on the market now? We had a pretty excruciating start to the year, very painful and slow March, and then came the April rally, and look how things changed, right? But hand on heart, I mean, how do you see the next 6 odd months play out? Do you expect that we'll largely be in a range, or do you see a breakout ahead?
Surabhi, this has been a rally where very few people have participated because people have been anxious about developments globally. And as a result, there is money sitting on the sidelines waiting to come in and invest. That is giving support to the markets. And in the recent rally, it is this money which is leading the markets up. On the other hand, there is a very real fear that you will have a credit event globally. The last interest rate hike may well have been the last straw on the camel's back, and we have small banks in US cracking like there was no tomorrow. As much as $1.5 trillion of market cap has been wiped out in the last say 2 odd weeks. In all of this, I can't see a situation where credit growth picks up in the US. And if that doesn't happen, that is the lifeline of business. I see that will impact the economy. How much of an impact only time will tell, but clearly between now and the year end, there will be an impact on the US economy. And that is an engine for global growth. So it will impact global growth as well. Whether that is all priced in or not, but this is definitely a risk aspect, and one must be vigilant, whether in the form of holding cash or just defensive positions. But this is a time where one must be slightly vigilant between now and the next 6 months.
Okay, all right. Anshul, thanks so much for stopping by and giving us your take on the markets as well as sectors that we discussed. By the way, at the start of the show, we made this point, 18,200 call. It was getting written at will. Now, what happened out there was HDFC came out of the blue, and that was a good set of numbers, which has taken the index higher. And post us breaking that 18,210, 18,215, we're quickly seeing a 30-point uptake. Though we have not yet crossed that 18,250, so let's see whether or not we can do that in the next 25 minutes, because now the highest open interest has moved to around 18,250 odd. Slip into a short break, you come back. The final 25 minutes of this expiry will play out. We'll also get in Mitesh Thakur to help us out with some trading strategies.
All right, welcome back. 170 points. I mean, it's almost as if the Fed cut rates yesterday. Forget about hiking rates or pausing. but this is just going
Why
one
be
way.
so excited? The Dow was down, 0.8%. The S&P 500 fell, but the Indian markets are damn excited.
There is, I think, that expiry factor as well. Maybe that is when we get the data. Yeah, the weekly. Probably we'll have some indication of what really happened. The flows should be interesting as well. Although, the cash market FI flows has been coming off, but it's still positive. I mean, I think the last number we got was 1,300 crores. So should be an interesting set when we get the numbers. And it's been smooth and steady, never faltering, never dipping or seeing sharp moves, very slow, steady. And the incline has gotten very steep, starting at about 230, 240 or so. So both the Nifty and the Bank Nifty.
It's been a reverse earnings season, right? We had the shocker and the scare and the howlers first. I don't want to jinx it, but it's been pretty much smooth sailing. We're yet to see another outlier, ugly number. It's not over yet, but...
And we'll compile the numbers as we always do, but, I think we're seeing more upgrades as compared to downgrades. So far, if you look at the 100 companies outside of the Nifty, the next 100 companies. Okay, more on that as we go along. But Manappuram Finance, I just want to quickly address that once again because, the stock did see a fair bit of damage yesterday, and now we are hearing this confirmation, this clarification from the company. So I just want to quickly read out. Look at the stock. It's recovered 5%. It lost 11% yesterday, and it's come up 5% now. So here is what the company is basically saying. And I'm quoting verbatim. They say ED surge related to deposits was accepted by Manappuram Agro Farms before 2012. 9.25 lakh in terms of deposits could not be repaid. The rest was repaid is what Manappuram is saying. But the 9.25 lakh as an amount could not be repaid despite Manappuram Agro's continuous efforts. Manappuram Agro is the erstwhile proprietor. Repaid all of the amount as excluding 9.25, which is the amount which is remaining. So this is, a brief, quick clarification coming in from Manappuram. Without the context and the background, etc., this is an old case. This is, of course, just that. The number which is, of course, very small in the context of the damage which the stock saw. So maybe the market is reacting with respect to that. But I think we'll try and put more in terms of background, since this is indeed a case dating back all the way to 2012. Mitesh is with us to tell us what to buy or sell today for a reverse trade tomorrow. When at 2:30 he was telling us that 18,250, if he were to get there, the advice is to book profits. Mitesh, we're at 18,262 now.
Yeah. So I think, Prashant, the idea remains the same. We will advise taking some money off the table and trailing the stop loss and balance point into about 18,170 now. And on the stock side, I think, you've been highlighting Reliance as one of the key participating stock in the upside. I think that's a BTST. Keep a stop below 24.39. Look for targets of 24.75. And Bajaj Finance is also on the list. That's a BTST with a stop at 63.74 for target of 64.40.
Okay, thank you for that. Now let's shift our attention to the special segment in the thick of the earnings season. So this is the Earnings Corner. In this segment, we'll tell you the key earnings that you need to track for today and the rest of the week. A lot of automakers, so Hero MotoCorp and TVS Motors will be reporting numbers post-market hours today. For tomorrow, all eyes will be on Federal Bank and Marico. And after that is the weekend. So let's take stock of today's earnings. Hero MotoCorp and TVS Motors will be reporting numbers. Sonia is here with the top list of things to watch. Sonia.
Well, thanks a lot for that. As you rightly pointed out, the numbers coming in from Hero MotoCorp and TVS Motor today. Now, for Hero, it's expected to be a decent showing this time around because there was a recovery that we saw in demand. So the volume growth will be about 7% on a year-on-year basis, coming in at 12.7 lakh units. Now, there was a healthy recovery both in urban and rural demand this time around. There was traction during Navratri, so the festive season also aided the numbers. And there was channel filling ahead of the BS6 norms that come through. So because of all of that, the volume growth has been about 7-odd%. However, the revenue growth will be better because the companies have undertaken a price hike as well. So 11% revenue growth is what we're looking at, a profit growth of 20%. For TVS Motor, now the story could be a bit different because exports have dragged down the overall numbers for TVS Motor. So although the volume growth has slowed down significantly to 1.4%, that will actually be dragged by a 14% downtick in export volumes. However, the revenue number will still be in double digits because realizations have improved on account of the price hikes that the company has undertaken. But it's two different stories. For Hero Motor, rural demand has picked up, while for TVS Motor, exports have dragged. So we await management commentary on both these numbers. Back to you.
Okay, got that. Thanks very much for the update there, Sonia. So those are the ones that we're watching out for from the auto space. Moving on, it will also be Federal Bank's turn to report numbers. What's the expectation like, Abhishek?
Well, Surbi, to begin with, they have already given the business update. So the business update is pretty strong in terms of the performance of deposit growth. Deposit growth is best in 14 quarters on a YOY basis. Advances growth is best in 17 quarters on a YOY basis. Sequentially, if you see, deposit growth is at 5.95% and advances growth is at 3.76%. What this indicates is that the CD ratio has improved YOY but has declined on a sequential basis. So in a rising interest rate scenario, this means that the net interest margin can come under pressure on a sequential basis. So Kotak Securities is expecting an increase in net interest margin by 28 basis points on a YOY basis, but they are expecting a decline of 12 basis points on net interest margin on a sequential basis. They are also expecting improvement in operating efficiency of the bank. Asset quality will remain stable. Last time the gross NPA ratio was around 2.4%. Kotak Securities is estimating slippages to be about 650 crore when compared to 412 crore that the bank had reported in the previous quarter. So watch out for the recovery, upgrade, write-offs, which can actually aid in gross NPA remaining stable. The focus would be on management commentary with respect to the liability side challenges that they are facing, how they see the near-term growth in terms of the loans and normalization of the return ratios. Our polls suggest NII growth of 32% YOY and about 3% sequentially. We are working with a profit growth of more than 52% YOY and about 2.5% sequentially. Back to you.
Right, will Federal Bank once again report a solid set of numbers? I mean, if you look at a slightly longer term chart, the stock has broken out. I mean, not a very big fashion, but it has broken out from that 120, 125 kind of level. Stocks are now about 140 rupees now. Sudeep Bandyopadhyay is...
Earnings that tomorrow, which will be very important. One is Britannia, and the stock is very close to its lifetime high level, just about 3% away, and the other one is Marico. So those two FMCG numbers will also be very crucial.
And of course, Hero and...
that's today. So today is Hero and TVS. Tomorrow is Britannia and Marico, along with Federal Bank.
Absolutely. Well, Sudeep Bandyopadhyay is with us, Group Chairman at Indie Trade Capital. He's joining us now. Sudeep, good to have you with us here. Thanks very much for your time. Any thoughts on Federal Bank? As they say, chahne wale bahut hain. The stock is not... I mean, it's kept waiting, people waiting and not done very much, but seems to be in a bit of a clean run now for the last many quarters.
Absolutely, you are 100% right. In fact, I have been liking Federal Bank for quite some time. I think they have a very stable management, mature management, and they have been taking all the right kind of steps. Unfortunately, this share price was stuck in that range and it was struggling to reach that 120 levels. It has finally broken out. Leaving aside the share price movement, I think fundamentally they are also doing a lot of things right. I think we always used to wonder in a state like Kerala where they have a strong presence, why aren't they aggressively pursuing gold loans? Now I think pretty much all the banks there are pursuing gold loans, and that is getting reflected in the results. Deposit mobilization has been a focus area, and advances also have been growing. Asset quality has improved consistently. There may be a little bit of pressure on quarter-on-quarter basis as far as this quarter is concerned on the margin front, but otherwise the numbers which they already have reported were pretty impressive. So yes, somebody looking at a one of the not the top tier banks, but the slightly level below that, I think Federal Bank definitely is a good bank to hold for 1 year kind of a period.
Do you look at Blue Star, Sudeep? Is Blue Star a company that you track?
I do track Blue Star. And
it comes out with numbers later today, and the worry is that maybe Q1 is not going to be so strong for these AC cooler kind of companies, given the way the unseasonal rains have played out in Delhi. Delhi today has recorded the lowest temperature in May in more than 40 years. Do you think growth is going to get hampered a bit?
Well, I don't think so, Rima. I think, there may be one-off rains here and there, but by and large, India is actually pretty warm now. And people are looking at buying. Consumption is increasing. I mean, there has been growth in rural consumption as well. And our channel checks say that consumption is back, not the way one would have expected, but it's definitely, there is a growth. And we expect Q1 to be definitely better than what Q4 was as far as Blue Star is concerned. So we will watch the commentary of the management as far as demand is concerned, definitely.
All right. Hi, Sudeep. Sudeep, it's a raging market. Today it's looking really, really good. And this is sniffing of some big short covering that's playing out. But one stock that's not participating on the back of its numbers is Petronet LNG. It's practically at the low point of the day with a cut of around 4.5%. You track that one?
I do. Unfortunately, I think that entire space has been under pressure, and there are multiple reasons. And I think it's best that space is avoided for a long-term investor for the time being. There are too many pulls and pressures in that particular space, and I think it's best avoided at this stage. If somebody has to play this entire space, it's better to go to the oil, hardcore oil companies like an ONGC. And I think there is room for valuation improvement in a company like ONGC. It's better to avoid Petronet LNG and the other gas transmission companies at this stage.
Okay, all right, Sudeep, stay with us. There's 9 minutes to go for market closing. We are up 160 points on the Nifty, and we're up on the Bank Nifty, almost 1%. That's 400 points. We'll take a break here. More market talk on the other side. Stay tuned.